Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're focused on answering one of the most popular questions you've submitted to us recently. Is New Horizon aircraft a good time to buy now?
Yeah, it's a hot topic. We've gathered the most recent analyst reports, technical data, and some internal company analysis on this one. They're really trying to carve out a high-stakes niche in that, rapidly evolving hybrid electric vertical takeoff and landing sector, the eVTOL space.
Right, the eVTOL space. Huge buzz around that.
Absolutely.
Right.
So our mission today is really to break down the fundamentals, the technicals, and maybe most importantly, the crucial upcoming catalysts based on the latest sources we have.
Okay, sounds good. And before we unpack all of that material, please make sure you subscribe, like, and comment. We really love hearing what you think. And hey, if there's a specific company you want us to look into next time, just leave us a comment below.
Definitely helps us shape the show.
Okay, let's jump in. We're looking at a company that presents maybe one of the biggest investment paradoxes in the modern aerospace market right now. You see these massive valuation targets, but then you look at the books and they're operating at a loss.
Wow.
So what's the fundamental pitch here for New Horizon aircraft? Why does the market seem to believe in it so fervently?
Well, what's really fascinating here, and kind of the core of the bull case, it rests almost entirely on one unique piece of tech, the Cavorite X7 project. Now, this isn't your typical pure electric eVTOL. It's a hybrid electric 7-seat aircraft.
A hybrid. Okay, so internal combustion plus electric.
Exactly. And that design choice is crucial because it aims to solve what many see as the single biggest hurdle in regional air mobility right now, which is battery range and, payload capacity.
Right. The range anxiety, but for planes.
Precisely. By being hybrid, they believe they can offer the sustainable advantages of electric flight, but overcome those mileage limitations that really plague the pure battery-powered rivals. This basically carves out a potentially powerful niche focused on longer-range missions within that regional air mobility sector.
Okay, so they're sitting in a high-growth market. They've got this unique tech angle. That's the potential side of the coin.
Yeah.
But let's, ground this in reality a bit. What does the recent financial picture actually tell us? Are they making any money yet? Or is this still a pure development story?
Yeah, that raises a really important and necessary question. They're definitively in heavy development mode. That means high capital expenditure, high cash burn. The sources we looked at indicate their net income currently stands at a negative $2.03 million USD.
Negative $2 million. Okay.
Now, for many companies, you'd see that negative figure and, it'd be a massive red flag, right? But if we put that into context, for a capital-intensive aerospace company just entering its certification phase, that figure is actually pretty standard. It reflects an expected burn rate. It basically signals ongoing heavy investment in the R&D needed to bring that Cavorite X7 to market. They are focused entirely on hitting operational milestones right now, not, generating immediate dividends.
Okay, so they're literally burning cash to build the future airplane. Makes sense for this stage. But if they are running a deficit, how can the market justify the, frankly, incredible optimism we're seeing reflected in some of these reports?
Right.
What are the professional analysts saying? And what level of flawless execution are they pricing in?
Yeah, the sentiment is extremely strong, and that creates the paradox you mentioned earlier. The overall analyst rating, looking across the board, is a strong buy.
Strong buy, okay.
And if you look at the consensus price target, it's set at $6.50.
$6.50. And where's the stock trading now, roughly?
Recently, just under $4, maybe closer to $3.60 based on the data date.
So that consensus target, that $6.50, suggests a potential upside of, nearly 80%, around 79.56% from those recent levels.
Exactly. This isn't just marginal optimism. This is analysts pricing in basically a complete success story. They're banking on the Cavorite X7 successfully navigating certification and achieving massive market penetration, precisely because that hybrid model, solves those critical range issues their competitors currently face.
Okay, let's just pause on that strong buy consensus for a second. Because in this eVTOL space, analysts often seem to model based on, let's say, perfect execution.
Right.
What's the bear case that could potentially drop that $6.50 target? Is there a specific risk tied to that hybrid system that maybe they're overlooking in their models?
That's a really sharp question, and I think the biggest overlooked factor might be the regulatory complexity that's inherent in the hybrid design itself. Pure electric vehicles, yeah, they face range issues, but they present a somewhat maybe simpler certification path for the FAA and other regulators.
Simpler, right. Less moving parts conceptually.
Kind of, but introducing a novel, flight-critical internal combustion component into the hybrid system adds this whole other layer of regulatory scrutiny and potential delay. It's a layer that pure electric rivals like, say, Joby or Archer might avoid. If that certification process gets bogged down because of the hybrid complexity, that $6.50 target, it could easily be cut in half or worse.
Okay, that's a key risk to track then, the regulatory side for hybrids. Now, let's maybe pivot from the fundamentals to the technicals, because here's where it gets really interesting for those watching the charts, tracking momentum. Despite that fundamental risk we just talked about, the stock has seen significant price appreciation this past year. What does the technical analysis suggest about the stock's current health?
Yeah, the price action definitely shows a clear, sustained bullish trend, which indicates that institutional conviction, not just retail hype, is supporting the speculation. The stock climbed dramatically from a 52-week low near, what was it, 25 cents, up to a high over $4. $4.88 was the peak mentioned.
Huge run-up.
Massive. More recently, though, it's been consolidating, trading within a, relatively tight range between about $3.51 and $4.18. And that consolidation actually reflects continued, sustained investor interest. It suggests the market's establishing a higher floor after those big initial jumps.
So the upward trajectory is clear from the price chart. Are the momentum indicators confirming this strength, or are they maybe signaling that the stock might be running a bit too hot for a sustained move right now?
Generally, they're supportive. And crucially, they indicate this isn't just like a retail frenzy driving it. Technical indicators like MACD, the moving average convergence divergence, suggest the recent momentum is being validated by solid institutional buying trends.
Okay.
So the momentum doesn't just look like a flash in the pan. It seems supported by the stock trading consistently above key moving averages.
And what about RSI? Is it flashing overbought?
That's maybe the most important part right now. The Relative Strength Index, or RSI, is currently around 65.61, according to the data. Now, that level is considered neutral to maybe mildly bullish, but critically, it leaves plenty of headroom.
Headroom, meaning?
Meaning, since the overbought territory typically begins above 70 on the RSI scale, the market can absorb significant new interest, new buying, without immediately triggering a technical pullback signal. That's actually a key sign for traders who might be looking for entry points. It suggests there's still room to run before it gets technically stretched.
Okay, that's critical context.
Yeah.
It shows the market seems to be validating the long-term story, at least for now, on the charts. Now, let's look ahead a bit. What has been happening over the last few months regarding, actual company activity? And maybe more importantly, what should investors be looking out for on the calendar?
Right. So over the past quarter, thinking July, August, September, the company has actually been relatively quiet on major public operational updates, which probably suggests they're, heads down in development, focused entirely on that Cavrite X7 engine integration and airframe development. That's the crunch time.
Makes sense. Less talk, more work.
Pretty much. Investor interest remained sustained during that period, but it seemed influenced primarily by just general bullish trends in the wider aerospace sector rather than specific company news. We should probably note one internal metric, though. There have been some insider share sales observed.
Oh, okay. Is that a concern?
Well, it's something to watch, but the reports also note that executives still hold significant long-term positions within the company. It suggests that while maybe some profit-taking is occurring after that run-up, the core leadership seems to remain heavily invested in the long-term vision.
Okay, fair enough. So let's unpack that future timeline then. Since this is a company in rapid development, the next 6 months must be pretty catalyst-heavy, right?
Yeah.
Centered around proving they can execute. What are the specific upcoming events that could move the stocks significantly, one way or the other?
Absolutely. The calendar is pretty focused primarily around financial reporting, which for them really serves as operational updates and institutional rebalancing days. These dates are definitely critical ones to mark down if you're following this name.
Okay, lay them out for us.
First and foremost is October 25th. That's their Q3 earnings report date. Now, given they're in this heavy R&D phase, we aren't really looking for revenue figures. We're looking for commentary on two key things.
Which are?
One, cash runway. How long can they sustain that roughly $2 million quarterly burn rate they've shown? And two, critically, milestones hit regarding the Cavrite X7's engine integration and testing phase. That's the real benchmark here, progress on the actual plane.
Got it. Cash and cavalry, progress on October 25th. What's next?
Following that, on November 15th, we have Institutional Investment Rebalancing Day, noted in the sources. This is basically where large funds reevaluate their portfolios. It can drive significant buying or selling pressure, particularly in smaller, high-growth stocks like this one, especially if they get added to or dropped from major institutional portfolios.
Okay. And then moving into the new year, what should we watch for then?
Well, looking towards early next year, January 10th is flagged for ETF rebalancing. It's similar to the institutional rebalancing, but specific to exchange-traded funds. It can also significantly impact trading volume and price.
Right.
Then, shortly after that, the January 18th Q4 earnings report date. That'll close out their fiscal year.
And is that Q4 report more important than Q3, you think?
Arguably, yes, because it should provide a much clearer outlook and perhaps budget guidance for the following year, which, in the EVTOL space timeline, is likely the year they really need to be finalizing certification prep, so expectations will be high for that report. Oh, and one other thing mentioned is the period around December 25th. Analysts sometimes refer to this as the holiday season report period. It's cited as potentially influencing consumer and investor sentiment heading into the new year, often reflecting sort of initial projections for the whole consumer transport sector. Less concrete, but something that influences mood.
Okay, lots of dates to watch there. But, with high potential always comes high risk, especially in this highly regulated, capital-intensive EVTOL sector. We've talked about the regulatory hurdle for the hybrid engine specifically. What are the other company-specific and maybe broader sector risks we should keep front of mind as we evaluate that nearly 80% potential upside analysts are seeing?
Yeah, we absolutely must return to the operational risk. That negative net income, while expected, still reflects the ongoing challenges of bringing completely new, unproven technology to market. Besides the regulatory challenges we discussed, we're also looking at potential supply chain vulnerability pretty common in manufacturing right now, especially complex aerospace.
True.
And then there's the ultimate hurdle, securing significant, verifiable market acceptance of eVTOL transport. It's not just about building the plane. You have to convince air mobility operators, airlines, maybe even the public, to actually buy and use fleets of them. That's a huge step.
Right, the adoption curve
Yeah.
and broader sector risks.
Well, the big one is just overall market volatility. If the general market corrects significantly, high-growth, high-risk stocks like New Horizon Aircraft will almost certainly feel the pain first and probably worst. They're very sensitive to market sentiment.
Okay, so real risks there. But the market isn't just driven by confirmed calendar dates and SEC filings, is it? It's always driven by buzz, anticipation, rumors. Beyond that confirmed schedule, what are the speculative catalysts floating around right now? The kind of rumors that might be fueling that aggressive $6.50 price target we talked about.
Yes, the rumor mill. There are definitely some significant rumors circulating that, if confirmed, could hugely boost the stock's momentum and maybe start to justify that valuation gap.
Like what?
First, and this is potentially a massive driver, partnership speculation. Rumors seem persistent regarding potential alliances or tie-ups with major established aerospace companies. Think Boeing, Airbus, maybe even automotive giants.
And why would that be so huge?
Because a partnership like that would instantly validate their unique hybrid technology. It could provide the necessary deep pockets for the expensive certification process and potentially solve distribution and supply chain issues overnight. It's a game changer, if true.
Okay, big one. What else?
Second, and maybe the most vital for de-risking the whole thing, confirmed regulatory breakthroughs. Specifically, there's speculation about imminent regulatory approvals or clear guidance tailored specifically for hybrid eVTOL technology. If the FAA, or ES in Europe, releases clarity or seems to fast-track their certification pathway, that would instantly remove a huge chunk of the risk hanging over the stock.
Right, takes away that uncertainty we discussed earlier.
Exactly. We also see some general investment rumors, whispers about potential investments from significant financial players, maybe sovereign wealth funds or major VCs. And even some rumors of market expansion plans, perhaps leveraging the Cavorite X7's unique platform adaptability for different missions or markets. But again, these are all speculative until confirmed.
Understood. Speculative but powerful drivers of sentiment. So what does this all mean then? We've brought together the strong buy analyst rating, the massive potential upside, that innovative hybrid tech, but also the inherent risks, the negative income, the $2 million cash burn. What's the final investment thesis here, synthesizing all this? And, who is this stock really for?
Okay, pulling it all together, the overall outlook rating that we can kind of derive from synthesizing these sources leans strongly bullish. Let's call it an 8 out of 10 bullish.
8 out of 10, pretty strong.
It is, and the rationale is really based on that innovative product offering the HOVR X7, which on paper positions them to potentially dominate a key segment of the regional market by solving that critical range problem. This potential is then supported by that strong analyst consensus we discussed, the fact they're operating in a rapidly expanding sector, and, importantly, technical indicators that show sustained institutional confidence, not just hype.
And who should be looking at it?
Well, the analysis suggests New Horizon aircraft could actually be attractive for potentially two types of market participants. First, short-term traders who are looking to capitalize on those near-term catalysts. We outline the earnings reports in Q3 and Q4, the rebalancing dates. There's potential for volatility and quick moves around those events. And second, long-term investors who are seeking structural growth and maybe competitive dominance in the very early stages of this whole eVTOL sector revolution. They're betting on the HOVR X7 becoming a reality.
So it really feels like the path ahead for this company hinges almost entirely on their ability to translate that revolutionary R&D, the HOVR X7 concept, into concrete operational milestones and, crucially, successful regulatory clearance within, say, the next 12 to 18 months.
That sums it up perfectly. Execution is everything from here on out.
Okay, so here's our provocative final thought for you, the listener, to consider. How much of that strong buy analyst rating, that 8 out of 10 bullishness, do you think is based on confirmed progress today? Things like the tangible airframe development of the HOVR X7. And how much is based purely on the expectation, or maybe the hope, that those crucial regulatory breakthroughs and that potentially game-changing major partnership rumor will actually become reality in the next 6 to 12 months? Where's the balance?
Yeah, that's the core question. And we definitely encourage you to review the official SEC filings and company announcements directly for the most detailed and up-to-date financial data. Our analysis here is based on publicly available data as of October 17th, 2025.
Absolutely. Always do your own research. Thank you for joining us for this analysis of New Horizon aircraft. We'll be back next time with another look at the sources you send us.